Welcome to Webinar Wednesdays. I'm very excited to be kicking off this educational series, and we are partnering with different education sponsors, and one of them is Ethical Finance, which you're going to learn a little bit more about tonight. So every single Wednesday, we will be bringing different webinars covering different topics. And they're all educational and they're all geared towards helping new people enter into the Web3 ecosystem. So I will always be kind of delivering the basics, and then we'll be bringing in some of the guest experts to be basically giving you a more detailed explanation. So today, part one will be the educational session, which I will deliver, and it will be very basic. So we cover a lot of terminology and key concepts. So for those of you that have been in the industry for a little while, some of the things that we're going to be covering today, you might already know and understand, but it might also be a good opportunity for you to refresh or hear it explained in a different way so that you can help teach other people to kind of break into different verticals within the Web3 ecosystem. Part two, we'll be having a fireside chat with Shoeb from Ethical Finance. We'll be bringing him in, and I've got a whole bunch of questions to ask him about his business model and how they're trying to do finance in a more ethical way, hence the name. Quick disclaimer before we get started. All of the information that we always provide for you in any of our live webinars or in any of our courses in the Education Hub, everything we provide is for education purposes only. It's not advice. We always recommend to do your own research. Actually, we're going to be doing a webinar specifically on how do you learn how to do your own research and different tools that are available for you. And we do record all of our content. So please just be aware of that, and it is shared. All right, so today's learning objectives is to understand the basics of RWAs, what they are, and kind of the role that blockchain plays. And we'll kind of talk about some of the pros and the cons and the benefits and some of the things that we need to be aware of. And then we're going to explore the opportunities to have more kind of ethical finance in our future. So, for those of you that don't know me and we haven't met before, my name is Danielle Marie. I'm the founder of Evolver and All Things Blockchain, which are both social enterprise projects, which are all focused around education and mentorship. Evolver is specifically focused on supporting women through our mentorship programs that we have. And then All Things Blockchain has been going since November 2020. We've always been educational based. So these two organizations work together and collaborate and bringing you guys networking and educational events all throughout Australia and globally. And I've been in blockchain and crypto education for over 5 years now. So I'd love to connect with you if you would like to discuss any of those verticals. Upcoming webinars. So as I said to you previously when we started, Webinar Wednesday. So every single Wednesday for the foreseeable future, I think we've got them locked in till June. We will be bringing you different webinars about different topics. So next week, we're going to be talking about centralized versus decentralized from the lens of exchanges and wallets and like understanding, if you leave your money in an exchange or a hot wallet or a ledger, how to protect yourself and stay safe because it's very, very important. Then we have a founder series where we're bringing on different Australian founders and they showcase how they're using blockchain technology in their use case. And then one of our education sponsors, Nexa, will be having a bonfire chat with Shanice, who is also one of a previous student of mine for very years ago that has gone on and been quite successful in building her career in the Web3 ecosystem. So all of our upcoming webinars will be on our Luma page. If you haven't already subscribed, I recommend that you do so now. If not, you can just scan your QR code and you can subscribe to that. And then you should get notifications or easily be able to go into your Luma and find them and see what kind of upcoming ones that we have and if they would interest you. All of the recordings and additional learning resources will be being put into the Education Hub, which we're currently building out. We already have some courses in there for you to already start learning, and then we're building out more free educational programs with our education sponsors that you'll be hearing from over the course of the next couple of months. We recently are working on launching, an online kind of community hub, and we have launched it on WhatsApp for now. However, I'm very interested on people's opinions. If you want to drop it in the comments, Telegram versus WhatsApp, because WhatsApp is very clunky and it doesn't have a lot of features. Telegram has better features for setting up community with different channels. But then there's lots of scammers on there, and then it's another app. So it's kind of very hard, but it's difficult to find the perfect platform. And remember, a lot of the people that are joining our community are very new. So we originally had started with WhatsApp. So for now, it's on WhatsApp, but we may choose to move to Telegram. It definitely won't be Discord. I am not a Discord fan. Okay, so let's jump into part one, the educational session. As I mentioned at the beginning, if you're just tuning in now, we break this session down into two parts. So I will go through the educational component, which will be just kind of explaining all the basic terminology and core concepts for you to understand. And then part two of this webinar series, it will change from every single week. Sometimes there'll be fireside chat, sometimes there'll be guest speakers, sometimes there'll be presentations, sometimes there'll be workshops. It will change. But tonight we'll be having a fireside chat with the founder of Ethical Finance. So let's jump right into it. Welcome to part one of Webinar Wednesdays, our very first one, kicking off with the real world assets explained. So my name is Danielle Marie, and I'm going to be taking you through this first part of understanding what are real world assets. And we're looking through this through the lens of Web3 and applying blockchain technology to them. Okay, so when you think of a real world asset, you think of things like property, you think of things like commodities, cars, different types of art, loans, contracts. These are just kind of some examples. And when I very, very first started to learn about blockchain and how it worked, and somebody was trying to explain to me how you could tokenize this piece of art, right? And there was these NFTs, and it was back in 2021 when NFTs were all popular and the big craze. And I was trying to understand how this piece of art could be on the blockchain, right? And it really took a while for my brain to fully grasp it. Okay, so for those of you that are like me, be patient with yourself. For some of you, maybe it clicks a lot faster. Okay, but they are just basically everyday kind of real world assets. Then what we're kind of doing is we're taking the asset and we're creating a digital representation of it, and we're tokenizing it, which we'll talk about tokenizing it in just a moment. But basically kind of creating a record, if you want, of this real world asset, and we're putting that digital representation onto the blockchain. Now, if you don't know what blockchain is, we're not going to cover that. There's other courses that you can go and do. And so some of this might not make sense to you if you've come across this and you don't understand what blockchain is. We're not going to unpack all of those terminologies. but there are free courses for you inside the Education Hub, okay? But we basically make a digital representation, and this allows to kind of bridge traditional finance, so which will often be referred to as TradFi, and then decentralized finance, DeFi. Now, we're not going to unpack DeFi too much today, but we are next month. So every single month, we'll be doing a webinar with ethical finance, and we'll be diving a little bit deeper into DeFi. And then we also have another short course, TradFi to DeFi, in our education hub, which is also free for you. So recommend checking that out. But it's an opportunity to basically take these off-chain assets, okay, which we just talked about some examples, property, commodities, right? So these are assets that we refer to as off-chain. So in Web3, we always think of like on-chain and off-chain. So we're talking about these assets, okay, like this phone, and it's an asset off-chain. It's not like an asset like Bitcoin, which is on-chain, okay, or solely on-chain. So a lot of like native tokens like Bitcoin or Ethereum or Solana, these would be assets. These are digital assets that are on-chain, and they're created on-chain. Rather than RWAs, they can be anything in the real world, and we're basically just creating a digital representation of that asset. So when we use tokenization, so when you hear of this term or this terminology, if you're new to it, this could be done in different ways. Okay, so it could be one token for one asset. You could fractionalize it. It could be used for different things, recording, tracking. It can basically allow more opportunity to have more functionality, transparency, and also global participation, which will make sense as we kind of continue to go through. So let's think of tokenization just in very, very simple terms. Okay, so you're basically taking tokenization is the process of turning ownership or rights into this real world asset into like a digital token on the blockchain. So we're essentially taking that asset, and there's problems with it. We're gonna get to that in a moment, right? But we're saying that, okay, Danielle definitely owns this phone, and we're gonna basically take that record of that ownership, and we're going to put it onto, um, you know, Solana chain or Ethereum chain, whatever chain, or all of them, multi-chain. You're going to put that record on there. So then now it's very open and public that I like own the phone, like I haven't stolen the phone, for example. But there's obviously some limitations with that we'll speak to in a moment. But in terms of tokenization, it basically can represent different things. So it depends on the, the asset that's being tokenized. We'll unpack in a moment, right? But it could be to claim, share, they could get interest on an asset. So it really will depend on each individual asset and how it's being tokenized. But the asset itself stays in the real world. So it's not like the asset itself is, on chain. So it's only the representation that moves on chain. So once the ownership of the asset, the real world asset, so if we keep using the phone, or if we use, property as an example, is on chain, then it becomes, quite easy to verify, and have transparency over the transfer of the ownership once it's on chain. But there's things that we need to be thinking about before they come on chain, which we'll unpack in just a moment. But when you think about real world assets, they already kind of exist in traditional finance. And I always say to people when I'm speaking to them and they're new to like the crypto or the Web3 ecosystem, I always say to them, I personally feel like Web3 is basically like the same way that we do things in traditional finance, but we're rewiring, we're using technology, and we're kind of changing the way that we're doing it and the technology that we're using. The core kind of principles are the same, in terms of like you're still earning a yield and you're still like, basically investing in stocks, and it mirrors a lot of the traditional financial ecosystems, but we're using these blockchain rails. Okay, so if you're new and you don't understand blockchain, you need to go and do a little bit more learning around that. But they already exist. So these things that we already talked about, property-backed loans, treasury bills, government bonds, real estate, commodities, invoices, receivables, these are just kind of some examples of, real world assets that we know of, that we use, and you may be very familiar with in traditional financial ecosystems. Now, you can take blockchain and it enables the tokenization of these real world assets. And so this is a very kind of big trend at the moment. And there's some very big name traditional financial ecosystems that you may have heard of, such as BlackRock, JP Morgan, Franklin Templeton. They've all been dabbling and playing in this space. So BlackRock launched a tokenized fund on Ethereum. That JP Morgan tokenizes collaterals and facilitates digital asset settlement. So a lot of these big traditional financial players are now getting involved with using the technology and using the blockchain rails. So, and we'll refer to that term as like on chain as well. So, on chain rails, using blockchain, payment rails, different types of terminology that you'll hear it kind of compared to. So when we think of real world assets, we have to think about the asset, in off chain, if we want to say in the real world, and then on chain. So we can kind of always have about like, where is that data coming from off chain that we are putting on chain? And that is one of the kind of bigger limitations. So we need to be thinking about, okay, well, what information typically lives on chain? Well, obviously, once there is a digital representation of an asset put on chain and it's tokenized, which we've just talked about, then their ownership records, all of that is living on chain. There is going to be a governance and voting mechanism. Okay, most of these chains, depending on what ecosystem that you're involved in, and then the smart contract rules. And so a lot of these are already created, the smart contract rules, the voting, the governance, and everything, before you've actually put the ownership record onto the chain. And that will be whatever chain that you're using. Okay, that could be the Ethereum chain, it could be Bitcoin, it could be Nexa, which is another layer one, that you'll be hearing from next month as one of our education partners. So it really kind of depends on what chain that you're using. What's off chain is all the legal ownership. So you're just because you make a smart contract, like smart contracts are not legally binding. Okay, we used to teach us a lot in the diploma blockchain. The legal ownership, the actual physical property. Maybe if you're doing any type of fiat payment rails, legal contracts, all of this is done off chain. You're only putting the representation on there. So it's very kind of important to understand that, because there's a big problem with RWAs and how information gets put onto the chain. So it's often referred to as garbage in, garbage out. So, if you're putting bad data, or bad information onto the chain, yes, okay, great. Once it's on there, it's immutable and it's transparent and all of that, but it's still not good data. So I just need to take a little sip before we carry on. So, garbage in, garbage out, the RWA data challenge. So, whenever you're thinking about a real world asset and you're wanting to tokenize it, how are you going to prove? And I've come across lots of different RWA projects throughout my time of my studies. There was like one with tagging the cows and there's been lots of them over these, and it's like, how are you getting that data off chain and then putting it on chain and with accurate data that we trust, because as soon as you're putting that information on chain, doesn't necessarily, everyone has this concept that you can trust it if that data is on chain. But if we're taking off chain data and we're putting it on chain, how do we know that we trust it? So this is one of the bigger problems with tokenizing and taking real world assets. And you have to think about the legal structures. Now, we're not going to unpack that too deep today. I briefly kind of touched on some of the potential solutions and the regulation and things that you need to be thinking about. But I'm definitely not a lawyer, nor do I specialize in RWA in legal structures. But you have to be thinking about, just because a property is tokenized and fractionalized and then it's put on chain, um, what's the legal structure? Is it set up as a trust? Who actually owns the property? How are decisions made? Like, there's so many questions around the kind of legal structure that you need to be thinking about as well. And you have to be thinking about what is the process for the reporting and the transparency of this data. If a DAO is buying different properties and tokenizing or buying businesses and tokenizing it, how is that all that information, that off-chain data, being reported? How true, how accurate is it? Are we sure that there's no fraud happening? At that level of, like, when you're setting up the structure of the trust or the DAO or however that legal structure is, for the information that you're putting on chain. So it's definitely a huge problem. And if you are involved in RWA project or you're thinking of getting involved in RWA project, these are the types of things that you have to be thinking about. How do we trust the data that is put on chain? And how does that information get put there? So let's think about some solutions and that they in the RWA sector have been kind of working around. Now, legal and regulatory frameworks, as I mentioned. Ooh, it just told me my internet was unstable. Hopefully, everybody can still hear me. Legal regulatory frameworks, that is a big topic of conversation, not only just based here in Australia, but all over the world. And there's lots, oops, I went backwards. There's actually a policy week that is coming up that I believe that's in Sydney for anybody that's interested in that kind of side of things. Independent audits and reporting, how are businesses making sure that they're bringing in third parties, doing these different types of audits in the Web3 ecosystem. You have to be getting smart contract audits all the time to be able to kind of be proving that you're a company and that you have good actors. So we have bad actors in Web 2 and in Web 3. I actually think there's probably just as many bad actors in both. So, like, how are we getting, if there's data or information on a real world asset, how are we making sure that we trust that information for the asset that we're going to be tokenizing? I keep going to the wrong side. My apologies. Governance and transparency. So this will come down to the different chain, how decisions are made in terms of the governance policy, but then also what's the governance policy within the project itself. So you would not only have the governance model of the chain that you've chose or that this RWA is on, but then you would also have an independent governance model within the RWA project. So understanding and making sure that you have good, clear governance and everything's very kind of open and transparent. Having these kind of trusted custodians or people that we kind of use to make sure that we verify that information, even though that's kind of the whole, like, essence of blockchain and Web3 is decentralization, trying to remove the trusted custodians. But when we think about the reality of how we're going to bridge the off-chain world with the on-chain world, I think that we're very far away where we're using decentralized oracles and AI and data feeds and completely removing trusted, intermediaries for certain things. I'm not saying that it could be the future, but I definitely think that we're still far away from it. So how do we want to do that now? We definitely need to kind of be implementing them, but I think by using other technologies. And I put in here, what about biometrics? Because, I just came back from traveling overseas, and some of the airports were just full on biometrics. Like I didn't even I think at one point I took out my passport once in the entire airport. And it just kind of got me thinking, what about, are we thinking forward? How is technology? How is biometrics? How is AI? How are these going to play a role in maybe helping with some of the solutions of taking off-chain data about like ownership, say you buy a car or you buy a house or anything of that nature. How could we kind of remove the current intermediary systems that we have to then basically kind of get that information right away on chain without having to kind of go through the traditional systems that they have to go through at the moment. So personally, I think that we're still quite a ways off, but I hope that helps people understand a little bit more of kind of that the RWAs in the Web3 sense is just taking a representation of it. So when we think about if somebody makes a representation of a piece of art and then fractionalizes it, right, which was a very kind of a common thing there for a while. And even artists were doing it and then sending you the painting as well, but giving you a digital representation of it. You have to think about kind of all of the regulatory side of things and how are you tracking the provenance and how are you verifying? And so when it comes to regulation and you're thinking about these real world assets, you have to be thinking about the local laws. And I've just realized it's 7:30 and I want to make sure that my guest speaker is here before we. Oh, I think I see him. Yes, he's here. Okay, great. We'll be with you in just a moment. I just was checking the time, because we're wrapping up this part one before, and we're going to jump into part two. But you have to think about the real world laws that are pertaining to whatever asset that is, right? So there's definitely no way that we would cover regulation in this particular lesson. But also, every jurisdiction would have different rules. So, wherever you're playing, I kind of recommend that there's lots of things that take into consideration. So, the token design, what information is being on chain, off chain, what information can be disclosed. You've got JDP, PR in Europe. Like, there's lots of different things that we have to be taking into consideration. So my kind of just recommendation to anyone that, is interested, wants to learn more about this, maybe wants to participate in some RWA projects, wants to understand, uh, to dive deeper a little bit more, especially say if you're, getting like kind of different types of loans, and we'll unpack kind of like DeFi stuff in the next webinar. My recommendation is always just to, engage a qualified local lawyer or do your own homework and understanding in what region that you're in, and carefully kind of understand the legal requirements of that asset that you're investing in, both with the on-chain and the off-chain, because it will vary from, different jurisdictions. And just really make sure that you understand what it is that you're buying with that tokenization or that representation. Because just remember, everyone can everyone or anyone can tokenize something, right? And if they tokenize something and you're buying that representation, understanding what are your rights. Are you buying ownership? Are you getting paid out a profit share? Do you get access to voting? Do you get access to both? So it's really, really important because every project that is tokenized will have kind of different terms and conditions, right, built into their smart contracts. So very, very important that you take the time to understand. Now, I do definitely want to take some questions and answers because I know that I breezed through that. But we do have our guest speaker who's all the way in Michigan. So what I'm going to do is if you have questions as I went through that, if they popped up, type them into the chat. We'll also circle back. I'll leave some time at the end for just kind of open Q&A. You can also always jump into the Education Hub, and we always support. There's a support and there's a sports, and I think it's Ask Anything channel. So you can pop in there and you can ask any questions in there. So you've always kind of got support. But what I want to do is move on to part two. So I just want to make sure that Shoaib is here. I'm pretty sure that I saw him. Hello, are you there? Can you hear me? Can you see me?
Yes, hello, can you hear me?
Oh, yes, I can hear you now. Yes. Okay, and I can see you. Very good. All right, we're getting
Okay, good
somewhere.
morning.
Good morning to you. Yes, it's early morning for you. Thank you so much for joining us all the way from Michigan, right?
That's right.
Yes. Well, we're going to jump into part two, and this is the founder, Shoaib, of Ethical Finance. I'm going to stop sharing my screen because we're just going to have a bit of a fireside chat. So just give me one moment, and I'm just going to bring up my questions for you. Before we jump into this part two of this fireside chat that we're going to have to get a little bit of a better understanding of yourself, your background, and because I know that you've always kind of been in the finance industry and understand how that's kind of led you to where you are today. So before we dive into understanding what ethical finance is, can you start by just telling us a little bit about yourself and your background? I know that you've been working in the Islamic finance industry for over a decade. So I kind of want to understand. Oh no, I just lost power again. Hello?
Hello.
Can you
We
still
can
hear
still
me?
hear
Hello.
you, though.
Oh, okay, that's good. Sorry, I've lost power again. I told
It's all
people,
good.
can you still see me?
Yeah, your laptop is on.
Yeah.
I hope your modem is on as well.
Yeah, and I'm hotspotting, so I think that we're good. I
Okay.
think I just lost my Zoom, so I can't see you because you were on my second screen. But I'm gonna carry on. Um, can you just tell us a little bit about what that journey looked like, and basically how it led you to where you are today?
Yeah, so I guess if you want to know what that journey looked like, I had a full head of hair before I started this. So my journey actually started in 2001, which was basically right after 9/11. And that is actually almost a quarter century, 24 years I've been doing this. And it's been a little bit of a struggle. We've had some highs and lows, right? I've seen a lot of market changes. We survived a lot of market changes from the 2008, 2009 market crash to a period of super high interest rates, which we're just recovering through. And we also had a period of very, very low rates during the pandemic. So we survived all of these things that, kids are going to be learning about in history Um, you know, um, Probably are starting to learn about some of these things now.
Wow. And how did your background in Islamic finance kind of help you kind of get to where, like, how did that experience lead you into where the world of blockchain and tokenization? Like, how did you kind of cross those two worlds?
Yeah, so while working in the traditional lending framework, I really came to the realization that there's no way to establish the Islamic finance principles. And the only way to put equality into the world of lending, and when I say equality, I mean a transaction should be fair for both parties, right? It should be fair for the lenders, fair for the investors, so that they're entitled to make a profit because they're in a business transaction with you. But it should also be fair for the consumer. And the way the rules and the laws are today, they're geared more towards um, one side, the lenders and the investors. They don't support the consumer as much as I believe that they should. And so the only way to support home ownership in a balanced way where both parties are getting a benefit, an equal benefit in their own rights, which is the basic tenets of Islamic finance, is through the world of decentralization and through the world of tokenization, right? The only way to make a decision making, uh, it, basically, common sense. Let's make decision making common sense.
Yeah, I think you really need to probably have a better understanding of Islamic finance and what that means maybe for some people to understand. So maybe just for those like including myself, like I don't have a deep understanding of it. Maybe you could just kind of give us a brief overview of what that their kind of rules are within their laws and why blockchain is such a good fit for it.
So I guess Islamic finance basically, maybe should just be called alternative finance because it appeals really to, well, first of all, to all the Orthodox faiths, right? We've got customers that are Sikh. We've got customers that are, Orthodox Jews. We've got customers that, well, we don't actually, but our transaction could appeal to Mennonites, more of the Orthodox faiths, right? People that don't believe that interest is, acceptable. And
Mm-hmm.
so there's uh, now, no interest, no riba, which is the thing that we're trying to avoid, does not mean no profit. It just means that the profit has to be earned in a way that would not be considered usurious or something that would be, really hurting one party over the other. So it's about bringing balance into transactions. And I guess the most the simplest way that I could put this is, well, I really started this project for. Several summers ago, we had a customer that applied. They were putting $100,000 down payment. They could document 36 months, 3 years worth of rent payments coming out of their bank account in the first of the month. Their monthly payment was going to reduce to 1350 roughly, about $150 a month less, and they got denied. And they got denied because their debt to income ratio, even though their credit score was, I think, 760 plus, which is a really good credit score, their debt to income ratio was 62%. So this person is qualified to be a tenant and make rent payments, make somebody wealthy, but they're not qualified to be in home ownership. Now, if you were
Mm.
to present that to the community in general, what do you think they would vote? Would they say, putting $100,000 down. They've got a stable rent history. They got a good credit score. Yes, we should allow this person to enter into a rent-to-own transaction. So they
Hmm.
continue to make their payments, they're saving money, they're building equity, and eventually get into a path of home ownership, which the traditional model, the traditional lending laws are not designed, right? They're designed to really make somebody wealthy, wealthier.
Mm. Yeah, well, you kind of just led naturally into the next question that I had, which was to talk about what problem that you're solving. But I also just want to say to the audience, anybody, as we go along, please, I love for these chats to be interactive. If anything is popping to your mind. Today is definitely a little bit more of a casual conversation of understanding and hearing from Shoaib, but we will be unpacking the model in depth over the next coming months and some of the future webinars because I don't think it's a lot of times when people are learning about crypto and Web3 and different, tokenization and different models and DeFi and all of this, you can't learn it all in 1 hour on a 1 hour webinar as much as we would love to be able to soak it all up. But please put your questions in the chat and we'll go through them as we progress along. So you've kind of already touched on it. That was going to be my question is what problem that you're trying to solve and who's kind of affected in this problem. So it says people that I fall in that category. I've been able to pay rent. I don't know if I'll ever be. I was talking about it with a friend today, and I was talking about living in Australia, and I don't think I'd ever be able to afford a home here in like Australia, the way that the house prices are and everything are going, especially the way that it's currently set up. But I can afford rent payments. Like that's not the problem, It's just being able, and especially now being an entrepreneur and having my own business, even though I can pay my rent, they would not give me a loan. So like the reality of me in home ownership is very far and few in between for me here in Australia. So I know that's kind of that's kind of one of the main problems that you're trying to solve with ethical finance, correct?
Yeah, that is. And really, the bottom line is that and well, first of all, our transaction is not just for Muslims or people of the Islamic faith, right? It's for everybody. And
Hmm.
really, the basic, the core philosophy, I guess I would say, is if you can afford to pay rent, then you can afford to be in a rent-to-own transaction, right?
Hmm.
There's no reason why investors can't make a profit, and somebody like you or me can't get to the stage of home ownership, right? And it's not just for people that are super wealthy and tick all the boxes of the traditional finance, right? They qualify too, right? This is for everybody. This is so that we can put a balance, uh, put common sense back into the world of lending.
Yeah, yeah, it sounds like it. Somebody had a question in the chat that you might, as it's specific to the US, what are some examples or institutions that are delivering regulated RWAs in the USA? I touched briefly, Shoaib, I'm not sure if you came in at the tail end there, that regulation and all that is very different from jurisdiction to jurisdiction. So that kind of might lead me into one of the questions. This particular, although the investors, from my understanding, and I know that we're going to unpack the business model around the lease to ownership and the whole tokenization in a coming webinar. But from my understanding, anybody can be an investor through the tokenization side of it. But for the people that are actually applying for the lease to own, is that only available in the USA at the moment? And what kind of
For
regulation?
now, only in the USA. Yeah. Look, we've been operating in the US for almost well, I've been operating, in this industry for almost 25 years. The nonprofit, the JARA CDC, JARA Community Development, has been around for almost, uh, 21 years in March. So we're established and we understand laws and regulation here in the US and Canada, because we actually operate in Canada. So we
Mm.
wanted to start here where we know there's a fairly stable real estate market, where we understand the rules and regulations and where we can basically be in compliance, right? And as we grow, we intend to grow out into, Europe, into the ASEAN countries, Australia being one of them. But, we want to establish a good base first before we go out and start, dealing with regulatory issues and other, in other sectors.
And is that quite like a challenge for you? Because I guess this person's question was if there was any good examples of institutions. Because, well, I had mentioned earlier some of the institutions like BlackRock and JP Morgan and stuff have these like tokenized funds and stuff like that. So I know that there's been a lot of discussion and there's all this movement happening, in the administration around regulation. Do you think that that's kind of still like as a lot of it's up in the air on the how the regulation is going to be formed around these real world assets and different business models such as yourselves that where you guys are basically trying to tokenize the lending of because in a high level that you're taking that the liquidity from the tokens to buy the properties where the people are having the loans, and then that's where the yield comes from for the token holders, correct?
Yeah. So, but I guess specifically to your question, I'm not aware of anybody that's actually successfully performing RWA transactions tokenized in the US right now. We're the only one. We've got a couple of transactions that aren't funded through this project. And the key to our success, I guess, so far, or our compliance with laws, lending laws, is that this is not a finance transaction. This is a real estate transaction. So it follows the rules and compliance issues that surround real estate brokerage. And we have a real estate brokerage, HR Realty LLC, that actually is performing the compliance part of the project. Okay. So we do not fall under lending laws, we fall under real estate regulation. And real estate regulation is quite established, particularly here in the US. Tokenization and the rules surrounding, finance and tokenization, that's all up in the air right now. A lot of that is
Mm.
changing, and we're keeping track of that changing landscape so that we know what adjustments we may need to make so that we can stay in compliance. Because at the end of the day, compliance is a major issue, no matter what jurisdiction you're in. So
Hmm.
we know right now that we fall under real estate rules and regulations, and particularly RESPA rules. And so we are in compliance with that, and we're continuing to monitor whether or not any changes within the laws of tokenization, will affect us. Now, you brought up, organizations like BlackRock, like MicroStrategy, for example. These are, yeah, they do have portfolios, but the primary focus is really just buying, Bitcoin and Ethereum and, just buying tokens, not actually, developing or funding projects specifically, right? They're just
Hmm.
invest. And I wouldn't say that that's speculative, but it is somewhat speculative, right? I mean, you're investing in
Hmm.
Bitcoin that, swung from what was it now, 63,000, to 117 at one point. I mean, that's a big swing. So, there is some speculation in the market. There is also, feelings in the market here in the US that, these organizations are, somewhat, controlling, these swings so they can buy more when it's low and sell when it's high. So, I mean, there's speculation on, public opinion on what's happening as well, right? So we're,
Yeah.
we're
Yeah, I think too when people and we touched on it briefly in the first part of like understanding RWAs and like that they fall in different verticals. So like tokenizing a fund, that might have like a whole bunch of different crypto projects in it, that is they can consider that like a real world asset because they've tokenized this thing that is like it's not the actual cryptocurrency. It might be like like ETFs or so very different compared to when we're actually talking about how the problem that you're trying to solve, which is trying to help people like me that can't get a loan from the bank but do want to own a home or I can't afford to pay that mortgage, but it's just too difficult. And then kind of using which I know that we're going to unpack on a deeper level in the next webinar. Sandra did ask, have you heard of projects like Lofty or Proppy? I personally have heard of them. I believe that they're in like t trying to go down tokenized real estate. I'm not sure if you know of those projects and if they've actually from one of the podcasts that I listened to a while ago. So this I'm going to say it was well over a year ago. It was still a lot of the theory, like it wasn't like the actual like tokenization of the house was being kind of like fractionalized and it was more the loan that was it wasn't the actual like property, and then another project that I know is it's more the fractionalization of the property management. It's not the actual property, so I don't know if you have any insights to either of those projects.
Yeah, so that's a great question. There are other projects out there that are trying to do fractionalized property ownership. But the fractionalized property ownership is on the investor side again. You're still on the bank side, right? It's not geared towards getting that tenant to home ownership,
Mm-hmm.
right?
Yeah.
So it's fine. We understand that, there are people out there that, yeah, I just want to be a property owner. I want to build a portfolio of properties that I own. And, this is how I'm going to build my generational wealth because I'm going to own a piece of, 500 properties, for example, right?
Mm-hmm.
But, okay, that's great. But look at the banks. The banks are making money hand over fist, and they're making it at, low interest rates. They were making money at 2, 3%, right? There's a reason why they're in this business of lending, right? Because they can make a huge profit. So
Yeah.
why can't we as investors make the same profit that the banks are making and at the same time do some social good, right? And what is the social good? The social good is helping people get into homeownership, right? Helping
Mm-hmm.
people build stability in their family lives because they know that they're going to, as long as they pay their rent, they're going to be able to build equity so that when their kids are old enough to go to college, they have equity enough to be able to refinance and put their kids through college. Or when the time for retirement comes, they're not 100% reliant on the government, to pay their Social Security because they've got equity in their home, right? I mean, as an example, for me, it probably could be, well, I can sell my home here in Michigan, take that money and go to Florida where it's nice and warm, and I can pay cash for a property there when I retire, right? That would not be possible if I can't get to the path of homeownership. So these other projects are great, but they're not the same focus, right? Our focus is to provide a balance between the profits that are being earned by investors and the ownership that can be built by simply making a rent payment and taking care of your property, which is what most renters do anyways, right?
Yeah.
So
Yeah.
I think the philosophies are very, very different. Uh, you know,
Mm.
and look, if people just want to be involved in real estate and be on the landlord side of things and make a profit, hey, we can offer that, right? If they
Yeah.
want to be involved in a project that is actually delivering a social good, and they don't need to feel guilty about making money on that for that
Hmm.
transaction, and we can offer that, right?
Yeah, yeah. What? So yeah, they're definitely different. I guess maybe the question more is like, are they actually? It would be interesting to understand, and we don't have enough time, and we're definitely. I still have a couple more questions, and I just noticed that wow, where does the half an hour go? But understanding where they're at in terms of the actual tokenization of properties and the legal side of it. I haven't dived deep into any of these projects. I've heard of them. I remember when I was kind of like doing a bit of homework on this a while back. It was still very early days, and it was a lot of concept. It was a lot of theory of like, hey, we're going to fractionalize these properties and this is how it's going to work and this is what we're going to do. But like, there was still so much regulatory uncertainty on how you actually structure that, depending on what jurisdiction you're in. And is it a DAO? And like, who owns the property? And like, how does it work? And, there's this very
Right.
complex
Yeah.
topic.
Well, the really the basic rule, I guess, is what we call the Howey test. And the Howey test really determines whether or not a project needs to be considered a security.
Hmm.
And these other projects do not pass the Howey test, and so are therefore considered securities and have to follow all of the SEC rules and regulations. We actually pass the Howey test, and we do not fall under we're not considered a security. We fall under real estate RESPA rules. And so, we are regulated by the same rules that a real estate broker or a real estate agent has to follow, not
Hmm.
the rules regulations that a banker needs to follow. And that's a very fine line. But based upon what we do and how we do it,
Hmm.
we pass that how we test.
Yeah, and I can't wait to unpack that in the webinar next month, where I know that we're going to take people because I'm sure some of them, if I have the question, they probably have the question of like, okay, how does that actually work if I'm like an investor in the tokens and like, how does it all work? And how does that fall in terms of like the token side of things? Like, I understand the giving of the loan side. Like I understand that if, hey, I'm going and providing, getting a loan so I can buy a property. But I'm very interested to dive a little bit deeper in understanding the model around being a liquidity provider as a token holder and how that business model works because I'm definitely interested. But I have a couple more questions, and then we'll wrap it up. I'll see if anybody else has. We're not going to get through to go through all of them, but what I'm hearing is that these kind of this ethical finance in terms of like following this kind of same kind of model as the Islamic and making it kind of good for everyone and it's kind of a social good. Is that why you chose the lease to own model instead of like a traditional mortgage structure? In terms of like what is the difference between the lease to own model rather than getting a mortgage and then paying that mortgage off? Is it that like when you get a mortgage from the bank owns it until you've paid it off rather than like, can you kind of give us a little bit of an understanding on why you've chosen that model and kind of what's the difference between the lease to own to the traditional?
Yeah. So, well, first of all, the tenants in the lease to own model have all the same rights and responsibilities as a regular mortgage, right? The reason we did the lease to own model is that it meets all of the Islamic rules of participation in what we call riba, basically interest, right? Um, you could say that it's an interest-free type of transaction, okay? And I would say that it's usury free, right? Where we're not taking, advantage of either party. And so It's a way that you can make, see, no interest doesn't mean no profit. You are permitted to make a profit. The question is, how are you making that profit? Are you making that profit by taking advantage of somebody, or are you making that profit in a fair and equitable way, right?
Hmm.
And the profit can be the same, right? I mean, banks, like I said, are making tons of money. We can too, right? But we can do it in a way that's fair. We can make the same profit, but we can make it in an equitable way. So the lease to own model meets all of the Islamic rules of participation and interest. Okay. It's also gives the tenant all of the same rights and responsibilities as a regular mortgage. Now, there are other Islamic models, right? But they don't but they still will favor the financier more than the tenant, right? So we want a transaction that's actually fair to both parties. And the lease to own model actually is fair to both parties. And the math is the same, right? There's nothing compliant or uncompliant about math. You can use any formula that two parties agree on. So on the lease to own model, you can have the same percentage of your rent payment going to ownership as it would be if there was a regular mortgage. That makes
Interesting.
sense. Yeah.
So interested to unpack that further, but we don't have time for it today. But I know that we are going to be unpacking these business models in the coming webinars. So I guess the last question that I have before we see if any one in the audience is, why did you need to use blockchain technology rather than operating ethical finance purely as like a traditional real estate or finance company? Like, what was the part where blockchain is kind of brought in that solves, like, because the overall solution of what you're trying to provide, right, is basically um, um, liquidity providers, say anybody, aka that buys the token or invests money, whether it be stocks or a token or whatnot, gets a percentage for providing the liquidity to be able to provide these loans. Like it's a very like easy to kind of understand model in that sense. Obviously, not understanding the whole lease to own model, but where did the blockchain come in? Like where does using blockchain to kind of like do tokenization? Why choose that solution over kind of a traditional financial solution?
Well, the blockchain really, provides independence, right? And independence in the sense that we don't have to follow all the rules that make, these institutions wealthier, right? Because that's what they're designed for. And as an example, in the US today, I can buy a property as an investment with zero income documentation, very little documentation at all. But if I want to buy that same property to live in, I've got a lot of hoops to jump through. And so the only way to really make these transactions fair is for the investors, the people that are providing the liquidity, the token holders, to have a say in what happens, right? In our automated application system, there's basically six different programs that you can qualify for. You either qualify for them or you don't. The seventh category is a governance vote. We do not, prove or deny anybody. The system does. It's done through a governance vote if you don't meet the criteria. And in traditional finance, if I am denied based upon, hey, my debt to income ratio is 62%, I am not permitted to talk to an underwriter and present my case, right? In our system, you can make a governance proposal, put your case out there, and let the community vote. If the community says, you know what, it's okay, we're going to take a risk with this person, it's rent to own, we're going to own the property, we think they would be a good rent to own tenant, let's approve it. Then we can close that transaction basically within 3 days, right? In a traditional model, the tenant cannot interact with the underwriter. You either fall into these fixed boxes or you don't. And if you fit into that fixed box, you will never get into home ownership. The system is just designed that way, right? And so we decided to use the blockchain because it is the best way to make sure that everybody that owns a token also has a vote.
Mm. I know that we're going to unpack that governance model and everything with the whole business model, and because now some of the questions are starting to get in there, and I know that we'll unpack it in more details, but we'll just answer the one question. Doesn't that make it a security if holders can vote? Also, what's the upside for the token holders? So I guess they just want clarity around how then the token isn't considered a security.
Yeah,
Um,
so the Howey test, basically, there can be no expectation of return, right? When you vote, that is a right. That is not an expectation of return. And in fact, the way this works is that um, the Ethy token holders technically do not earn a reward. You have to convert that token to a Z or Ethy token, and then you can stake that token and you can get rewarded. Basically, you share in the rent that's paid on the property, and that is paid in Z Ethy, and that can be traded one to one for an Ethy token, and then you can sell the Ethy token on the open market. So you
mm,
can earn rewards, but you're not earning them with the Ethy token. You're earning it with a Z Ethy token, which is a representation of, the tokens that you do hold. So the only uh, expectation that you have as a Ethy token holder is participation in the project through voting, and that is permissible under the Howey test. So it is
mm.
not considered a security.
Interesting. And I think that we could probably, and we've got some good questions coming through now, which I think are going to be better for the next webinar. I know that's probably like when you're watching a show and it cuts off and you've got to wait till the next release.
Yeah.
Because I know that Schwab is going to take us through more of the business model and answer some of these questions on a deeper level. So the next one, yeah, sorry, you'll have to save it for next time. But I love that you guys are jumping in there, and I also want to understand. So just to kind of give you an overview, the next one that we'll be doing with Schwab is 1 month from now. So it'll be, I believe, on February 18th. I just have to kind of confirm the time because he has to get up very early in the morning for these sessions. But I will drop his LinkedIn actually, or if you have your LinkedIn open, they're asking to connect with you. But
Sure.
please stay by for those of you. We are going to be jumping into a couple more webinars. Will be, as I mentioned previously, we will always announce them on the Luma. We share all the recordings in the education hub. So we will be diving deeper into the business model itself so that we can unpack it and understand it because I'm very interested also for myself. Um, but that kind of led me into the last question was what can people expect to learn in the next webinar as we kind of go deeper on the token holder model and how it actually kind of works in practice. So I think that you've already kind of covered that. You'll probably take us through how it works in terms if somebody were to invest and how you have to switch it and how you can vote and and how that all works and how it doesn't what yield that they get and doesn't have to be locked up, like all these different types of questions in terms of terms and how often do they get paid out and everything. Will that be the type of stuff that we'll be going over in the next webinar? I think that's
That'll be in March, right?
yeah, that will be in March. So for those of you that are interested, those are all the things that we will be covering. Thank you so much for getting up early and having this chat with me. I'm even more and more excited because I think that a lot of the principles of your business model and what you're trying to do, and your social impact project, which obviously is why I think we connected. We actually all met. We met a couple of years ago in Dubai, actually, for Token 49. And I was kind of just thought that what you're trying to do is, such a great little project. Someone's asking for your LinkedIn. I can share it in the chat. But thank you so much. I hope that everybody got value from today's session. For anybody that think somebody would have gotten value from it, all the recordings will be shared in the Education Hub. And don't forget, next week we will be talking about centralized versus decentralized. We'll be talking about exchanges and how you can kind of keep your assets safe. So please join us for that. And Shweb, enjoy the rest of your day. Thank you so much, all the way down here from Australia. And oh yeah, that's what I was going to do. I was going to share before I can press the stop recording button. I'm going to press the stop recording, and then I'm going to share your LinkedIn in the chat. But I'm just going to go ahead and thank you very much, everyone. See you on the next webinar
All right, thank
Wednesday.
you.